I'm gonna let Sean introduce himself because I don't know enough about his background, his history to tell his story. I know he wants to tell his story, so I'm gonna turn
Yeah,
it over to Sean. So Sean Gaffney, the floor is yours, brother.
thank you. I appreciate that, Coach. So, good evening, everyone. It is awesome to be here. Like Coach Dunbar said, we got connected, through different networking, and we want to be able to, help each other and support each other's clients, the best that we can. So, just to tell you guys a little bit about me, how I got started, how I got into this industry, how I, started working at ADP, and how I got into payroll and this whole industry. A little bit of a unique story. But just to give everyone my background, I'm originally from New Jersey, so down here in the sunny South Florida weather, but originally from up north. I, played a lot of sports growing up. Went to college for football up at a school called Marist College. Studied finance up there. Then I got a master's degree in integrated marketing communications. I was actually a coach for a number of years, coaching college football. I was a tight ends coach. I was also an offensive line assistant coach. So when I saw Coach Dunbar's name, it made me feel right at home, and it was really unique. It was really cool to hear how what he does with his clients, and kind of helps them with his business coaching and allow them to reach their full potential, is a common thing that we shared. So that was one of the things that I wanted to, be able to do with him, is go into this webinar with you guys, give you some information around payroll, kind of, how ADP works for small business owners like yourself, even if it's a one employee business, all the way up to 40-person business, we have a lot of different tools and, services that can help all of you, kind of reach those goals. So, we'll just get right into it. We're going to go through this presentation. It's going to be informative. Payroll is not, definitely isn't the sexiest topic, but we're going to try and make it fun with you guys, and, try and make it as applicable as we can to your guys' current situations. So we could get right into it. It says centric account executive there. That's a new change. We went away from the district manager stuff. But I work closely with the accounting community. In supporting, a lot of, tax preparers, CPAs, a lot of their clients, with payroll services, regardless of their situation. I started with ADP back in July of 2022. So been here for a few years now. It's an awesome company to work for. Really, really been enjoying, my time here and kind of the work that we're able to do with our partners, with their clients, and with our customers at the end of the day. So everyone, this is just a disclaimer. What I'm going to go into today, this is not legal advice. I really hope everyone will just, consult with a tax professional or with a CPA after this. I know enough to be dangerous, but I don't have a license. So just want that disclaimer out there. Again, this is just meant to be informative and just to let you guys know all the different ways payroll can help you, and if it's applicable for you. So guys, this is just the agenda we're going to get into tonight. We're just going to go over a little bit of, who needs payroll, who, would benefit from it, the differences between a W-2 and a 1099, payroll 101. We're just going to go over to like a little example of some of the ways that you guys can save some money on your taxes, and then the client member benefits that everyone has access to as an ADP client, and then we'll open up the floor for questions at the end. So guys, this is just some of the things that we'll see a lot in our industry, or, what we'll hear when we're, talking to small business owners. Typically, some people believe that they're too new for a payroll service, or they don't have enough employees, or again, they have all 1099 contractors, or if they, aren't sure if they can afford themselves. All relevant thoughts and all relevant objections. So we're just going to, kind of address some of these things and just kind of give a little bit more of an insight to, the world of payroll and taxes that a lot of people might not be aware of. So that's just our end goal, with tonight's webinar. So what types of businesses need payroll services? So the first one we're just going to talk about is sole proprietors. So if anyone is legally and their legal entity formation is as a sole proprietor, you necessarily do not need payroll. If you were to become a W employee on the payroll, you would be required to deposit payroll taxes such as your federal income tax, your state income tax. Luckily, we don't have that in Florida. Your FICA, your SUTA, your FUTA, and you would be required to file quarterly tax reports. Now, the benefit of this is that you would be paying yourself through payroll, right? What we're going to get into next is kind of as an S corp, right? As that entity, how as an S corp you can save some money on the taxes side using a reasonable salary and avoiding self-employment taxes. So just right here, if you were a sole proprietor and you were to have a W-2 employee, you would be required to have a payroll service. If you were to pay yourself as a sole proprietor through payroll, you would be able to avoid, if you were to put yourself on as a W-2, you would be able to avoid the payroll tax. Again, that is just something that we'll get into a little bit more with S corps and kind of how that works with those entities. Again, this is for sole proprietors. So as a sole proprietor, if you have a W-2 employee, you are required to file payroll taxes. And if you do not, you would be required to pay self-employment taxes at the end of the year. So this is going into just S corporations. So S corporations are legally obligated to have payroll. Why is that? So as an S corp, you are not required to pay self-employment taxes. You are going to pay yourself a reasonable salary, which is based on your industry, kind of, what industry you're participating in, and, how much money overall the business is generating. What is the benefit of this is with payroll taxes, you could see yourself paying anywhere from 6 to 8% of, 6 to 8% of your income in taxes. Where, if you are not an S corp and you are just paying yourself as just a sole 1099 as a business owner, you have to pay self-employment taxes. So being able to pay, anywhere from, 7 to 8% less in taxes on your income is a huge benefit if you are one employee company. And that's kind of what one of the things that we wanted to emphasize here is some employee and some small business owners are a little bit unaware of, being an S corp. If you're not looking to, take on really any more employees, some of them are just unaware that, having this legal entity formation, it does allow you to pay yourself, again, that reasonable salary. Let's say if you were, making $100,000 in income through your business, and the industry that you're in, and with a reasonable salary, that amount really would be $50K for what industry you're in. That means that you will be paying taxes as an employee, not as an employer. And those taxes would be based on that reasonable salary. So your business might be bringing in $100,000 of income. However, that reasonable salary is what you'll be paying taxes on. So that was one of the things I just want to touch upon. S corps legally need to have payroll simply because they will not get self-employment taxes. They will not be obligated to pay self-employment taxes. And this is important because depending on the industry that you're in, that reasonable salary, can be, pretty flexible and much lower than what you're actually making. And then the rest can be done through a draw. So, you're going to be able to save a lot on the front end in the taxes. So this is just going through an LLC. If you do have W-2 employees with anything with a W-2 employee, if you guys have any W-2 employees, it is legally obligated for you to have payroll. We're going to kind of get into just a little bit of the differences between W-2s and 1099s. We'll touch upon that briefly. But one of the things that I just also want to mention is with, an LLC. Right? If you were an LLC and you wanted to pay yourselves as a W-2, you would be required to deposit payroll taxes such as, federal income tax and everything that's listed here in this table. However, you do not need to pay yourselves as an LLC and you can simply take in income. right? If you don't want to pay yourself, you will be obligated to pay self-employment taxes at the end of the year, right? So as an LLC, putting yourself on the payroll as a W-2 employee will allow you to take advantage of that benefit of avoiding the self-employment tax. So this is just kind of a summary of just, the different business entities and just kind of their legal obligations with payroll. So S corporations, kind of what we went through before, they will always need to process payroll. It is by law, if you're an S corp, that you need to take some form of a reasonable salary through payroll and pay payroll taxes on it. For sole proprietors with no employees or single member LLCs who do not elect to be taxed as corporations, they do not need payroll. However, we are going to kind of go into a little bit more detail of some of the benefits of having yourself receive some type of salary, for proof of income purposes and pay stubs. So we'll get into that in a little bit. But this is just going over the legality of it. W-2 employees must be paid through payroll regardless of your entity formation. So I just want you guys to be aware of that. If you were ever to hire an assistant or another employee, it's important that you guys abide by kind of these rules, as it could be, you don't want to get into a sticky situation. And we'll kind of go into that just with the W-2 versus 1099 employee. So really just talking about, an independent contractor, right? For you guys, a lot of things that, make someone an employee is a few things, right? Are you telling them when they need to show up to work? Are you telling them what their hours are? Are you telling them, are they using your equipment? Right? Is their, schedule dependent on kind of what you're providing? Right? All of those things, I'll have a table that will show up for a better visual. But all of those things that I kind of just mentioned, that would classify you as an employee of a business. Here, as an independent contractor, this is when you provide service in an independent trade, business, or profession. You are your own business owner and you are providing a service to the people that you do business with. You're not their employee. You work on your own schedule. You have your own equipment. You get paid a certain way, and it's not a consistent amount and a consistent salary or a consistent hourly rate, right? It's for a certain contract or project that you are going to be. We continue. Okay, so this is just kind of what happens when a worker qualifies as an independent contractor, right? So there are a lot of fewer obligations for the employer, right? So, unemployment, taxes, workers' compensation, all of these things. Okay, but some of these obligations apply to both employees and independent contractors in some states, such as new hire reporting and anti-discrimination and anti-harassment laws. So the IRS came out with the common law test. So these are some of the things that, they will go through just to determine, those employees' status, like the length of the relationship, the permanency, the business activities that are being done, when and where the work is performed. Are you on location? Are you off location? What tools are used? Are you using the business owner's tools? Are you using their equipment to do the work? Are you being supplied a laptop, computer, all of those things? And who's dictating the work? Who's telling you what work needs to be done? Is those types of things.
Hey, keep up good work.
And then the other financial considerations is just the method of payment, the opportunity for profit or loss, and whether services are available to other businesses. Is this 1099, working for multiple business owners, or are you the only person employing them? So these are some of the, questions that the IRS will go through with those employees to determine their classification. Now, this is important because I'll give you guys a little background. One of my, lifelong friends, his family owns a bar back up in New Jersey. They've been in business for 50 years. For, a good 10 of those years, when his dad was running the business in the early 2000s, all of his employees, or majority of them, especially the waitresses, the bussers, the bartenders, they're all getting paid as 1099s. They were getting tips. They were just, 1099 employees. He wasn't paying any employer taxes on them. So the IRS came in one day, slapped him with a $150,000 fine, and proceeded to try and take the bar that has been in their family for about 50 plus years. Luckily, they were able to find a way around it. They had a very good CPA, and they were able to kind of fight it. They still had to pay a whole lot of money in the IRS in addition to back taxes, but it's something you don't want to mess around with because it can seriously, seriously burn you in the long run. And don't worry, they are good. So anything that you think you swiped under their nose, they will sniff it out. Trust me. So it's definitely something you do not want to mess around with. And this is just, again, the information that we want to give you guys so that if you bring on anyone as an employee, the differences between having them as a W-2 and a 1099. And this is just kind of saying just a little bit what I touched upon before, just kind of why the correct classification is so important, and just really just getting in trouble with fines, penalties, lawsuits. There was a situation where someone had a few employees and, they had workers' comp, but they only reported themselves. They didn't report their employees. All their employees were 1099s. They had no workers' comp coverage for those employees technically. And then, a major accident happened. And, now that employer, he's in jail because he was lying to the government. He was not, he didn't have his employees classified correctly, and he had no workers' compensation coverage for people that were his employees that should have been W-2s. And, he's facing a major lawsuit and is in jail at the current moment. This was down here in South Florida. So it's definitely something you don't want to mess around with. So this is also just the other thing I want to touch upon for those who aren't S corps or, do not want to try and, form an entity like an S corp or transition into an S corp. If you were to set up payroll, what are some of the other benefits besides avoiding the self-employment taxes? Well, for a lot of you, you probably had to go and get a business loan at some point. You've maybe had to go and get a mortgage, right? For me, I was getting my first apartment a few years ago, and one of the things that the association asked me for, hey, I need some proof of income. Do you have pay history? Can you send me your last 6 pay stubs? I didn't have any of that at the time, right? So by having yourself and by using your business in this way, right, and making yourself a W-2 of your business, you are able to get loans easier, get lines of credit easier, right? Get approved for apartments faster. I know that when sometimes people go and find a new job, sometimes they want to see the pay history from their previous employer, their proof of income, right? Their pay stub to make sure that you actually worked there. All good things to have on hand to show what you've actually made and that someone can give you credit. Someone can give you a loan, that you can get money from banks, right? And show that you are making money. And then, guys, the other thing that I just want to say, just with payroll services, the one thing with compliance, tax laws, all things that are changing all the time with the IRS, doing in-house payrolls can get tricky. It can get time consuming. You can make a mistake. It can be very, very daunting, right? With ADP, we take on full responsibility with the IRS. We have a full service tax team that will respond on agency notices on your behalf, and we will keep you consistently alerted about your business and any potential alerts that you get from the IRS. Why is that important? All right. I'm not sure if you guys are aware of this, but ADP is a little bit different than most payroll services. A lot of payroll services or payroll companies do not have individuals like me, account managers, people who are out in the field, people who make relationships with their clients and, works closely with accounting firms, tax preparers, and bookkeepers, right? At ADP, if there is an issue or something that needs your attention, myself will be calling you. I will be alerting you, and I'll be making sure this gets taken care of in a timely manner. QuickBooks is a big service that a lot of individuals use. if you had an issue with the IRS on your reports or on, kind of your taxes or anything that's going on with your business and what you run in payroll, QuickBooks won't let you know. They won't really tell you. Well, they will, but they'll email you. They'll send you an email. Now, I know how many emails I get throughout a day, and I know all of you guys are saying the same thing. It's easy to miss. It is easy to miss that stuff. And you can miss it, and then no one's going to come and, chase you down and take care of this. You're running around, running your business, trying to make it profitable, wearing a lot of hats. Don't let another service or some other provider not help you out with this, right? We will make sure that this is addressed. Another payroll provider, right? They don't have a lot of employees like me, right? They are a large company, right? But their support lacks in a lot of areas. They will send you that email to alert you. But if you miss that email and that goes down that inbox and you don't address it, you can be in a heap of trouble. So that's just one of the extra benefits that ADP brings to the table, is helping you stay in compliance, taking on that full responsibility with the IRS, and then having someone like me as the account manager monitoring what's going on and alerting you if there's something that you need to act on or that needs your attention. So these are the benefits, right? We have this partnership with TBD Coaching because we believe that it is essential for us to offer these types of services to his clients. He's working with small business owners. So these are the things that are a benefit to you guys. Complimentary HR screening. We will discuss what we just covered along with additional HR-based questions and support. I don't know if you guys are aware of this, but ADP does a whole lot more than just payroll. We are the leader in HR software, right? So we have different capabilities when it comes to background checks, a ZipRecruiter profile, which we have available on all of our bundles to help you find qualified candidates, right? This isn't Indeed. ZipRecruiter is a paid subscription that people pay a lot of money for. That is included on all of our bundles. The benefit of that is finding qualified employees that are to your liking, that are specifically handpicked for you. The background checks are there so that when you get to this point in your business and you're bringing people on, you make sure that the people that you're bringing into this world that you use to support yourself, that you can trust them, that you are running them through, the types of screenings that you want to make sure that they can speak to the people that you work with and that they would be a good fit for your business. The level of background checks that we have goes through a lot of different categories. You can do drug testing. You can do like DOT stuff, all of those things. So we have a lot of different tools available to our clients to help them find the right employees to make their team better and to make sure that the people that they bring in are who they say they are at the end of the day. The next is 30% discount on payroll services for all clients of TBD Coaching. This is important. So with myself, this 30% discount, this is not a one-time thing. This 30% discount isn't something that you'll receive and then 6 months down the line, you're paying full price. At ADP, any discount that you receive is for life. You will have that for the remainder that you stay a client on our service. Well, I believe that we are one of the only types of businesses in this space that offers discounting at that level. We have a lot of individuals that we compete with, a lot of other companies that we compete with that offer what we call honeymoon pricing. That is not who we are. We are the industry leader. We started this company 75 years ago, and we created payroll services. Next is kind of just 2 to 4 months of free service. This is just dependent upon the month, and this is just an ADP internal thing. So at ADP, we offer, a lot of different promotions depending on the time of year. And that can be, anywhere from 2 to 4 months of free service. We've even gone as crazy as 6 months of free service. I just want to let you guys be aware of that, of kind of the different months of free service. And then the other thing that's not on here that I want to touch upon, ADP does not work on a contract basis. So when you come on board with us as a client, you are not obligated to stay a client of ADP. The reason why that's important is because a lot of people, when it comes to payroll and taxes and all of these things, get very concerned of the implications if they cancel their service with us. With ADP, you can cancel at any time. It does not work on a contract basis. There is no fee to set up an account, and there is no fee to terminate. So I just want to make sure that you guys are all aware of that and kind of how our company works just on the pricing, on the structure, and all of it. So last but not least, always the right fit now and in the future, right? This is what's important. No matter where you guys are at in the process of your business, whether you're at the beginning stages or you've been a business owner for 10 plus years, we have tools that can help you grow and to succeed and to get the most out of your profits, right? We do business insurance. We do the workers' comp insurance. We have different hiring tools like I talked upon, payroll and taxes. That's our bread and butter. But the thing is, I just want you guys to see right here in this slide, right? This is kind of the life cycle of a business with ADP. You have your business insurance. You get your business insurance going, then you have your hiring tools. Those hiring tools lead to more employees. Those more employees lead to payroll and tax filings. That then leads to setting up maybe a timekeeping system, time tracking, right? Then that comes over here to group health and so on and so forth. So no matter where you guys are at in your business, we have different products, different resources, and different tools to help you guys go to where you want to be. And I hope that, some of the things that we went over can kind of show you just on the taxes side and on the income side, with having payroll, kind of the benefits of where you can save, where you can protect that income, the different, products that you can use to save money on taxes, receive tax credits and business tax write-offs, so that when, April comes along and, March and April, you guys will be in a much better situation than you were before. And lastly, guys, we operate all over the place. So if you're on the phone, we have mobile apps. If you're on a tablet, we have apps for that as well. Laptops, computers. If you ever needed to run a payroll, you can always call it in from your phone if you can't access a laptop, a computer, or your app is just you're not able to log into your app. We are also able to do next day processing. So if you have let's say if you have a check date of tomorrow, right, you can actually run payroll up until 5 p.m. the day before, and all that money will get directly deposited into your bank account. We don't charge any extra fees for next day direct deposit. The other cool thing is if you were paying via check, we hand deliver those checks to the business owner, and that is those checks get sent out next day as well. So if we ran payroll, today at 5 o'clock and you had 15, 30, 25 employees, they will all receive their paycheck by around noon the following day for payday. So that's just the flexibility and the type of reach that we have from someone that's been in the industry for a few years. Having flexibility in that space is essential for small business owners, trust me. Thank you very much.
I'm gonna switch screens real quick just to and y'all should see this populating here in a second. Possibly reducing your taxes with an S corp. And the reason why partnering with Sean and ADP made sense for me in the space that I'm in is because I've got a lot of clients who get caught in some of what Sean said. End of the year comes, time to pay taxes, and they're complaining about this big lump sum they owe the IRS. They're not paying taxes quarterly because they're doing everything themselves. As a business coach, I talk a lot about automating. I talk a lot about Michael E. Gerber's book, E-Myth, where stop being a technician in your own business. Literally things that you shouldn't be doing, stop doing them. Do the business part that whatever you do in that business. If it's a dance school and you are a dance instructor, then you do that, right? All the other things in the business when it comes to trades and having a CPA and a tax strategist, a bookkeeper, somebody dealing with maybe some legal things that may be happening with your business, that needs to be turned over to somebody else. I'm all about automating a business, having a great workflow. And part of that is understanding that you need to be structured the correct way. You need to have people that you can consult with. And when it comes to reducing taxes, we hear this. This is starting to be a more current thing, and I try to get ahead of the curve. Being an S corp saves on taxes. go from an LLC to an S corp, you'll save on your taxes. That's not always the case. Sometimes it's not that. So I want you guys to know that there is a situation where if I would typically tell my client, if Sean was a client, hey, don't look at moving from an LLC to an S corp unless you're pulling in $50,000 in profits after everything is over. If you're pulling in $6,000 or $7,000 in profit, it's not worth the extra paperwork. It's not worth the switch over. Keeping up with more meetings, minutes, and all of that, because there's a lot more because of the shareholder situation that you have to do than it is in LLC. So there is a little bit more complications with an S corp than there is with an LLC. So to save $500 or $600, $1,000 probably is not worth it, in my opinion. Now, whatever you decide you want to do is totally up to you as a person. But I'm gonna tell you some reasons why. I'm gonna give you a couple of scenarios before we go, just so you all guys can see. I'm gonna go where it's gonna be a scenario where a person is saving a lot of money all the way to where they're almost breaking even, just so you guys will have an idea of what I mean when I'm talking about moving into the space of an S corp as opposed to an LLC, so you can pay yourself a reasonable salary, which is another reason for me, because I've got so many clients who are running a business and they're not paying themselves enough to run the business, and that could possibly get them in some trouble. Plus, they're not profiting enough from their business. They're trying to grow a business, and all they're doing is setting themselves up to be taxed higher and to pay employees to do work, but they're not making money themselves, which is all of what the book Profit First is all about. So just so you know, switching to an S corp is a good way to save money on taxes, but we will also discuss the pros and cons of switching to an S corp. So for those that don't know what an S corp is, it's a type of corporation that allows you to pass your business income through your personal tax return. This means that you will only pay personal tax income on the profits of your business, so that you guys understand that. And two main ways that an S corp can save money on taxes, right? Self-employment taxes. You heard Sean talk about that here today. Self-employment tax is a type of tax that is paid by a sole proprietor in a single member LLC. It is equal to 15.3% of your net income. However, if you are an S corp, oh, you know what? Hold on. Okay, no, you guys can see it. If you are an S corp, you can pay yourself a salary and only pay self-employment tax on that salary. This can save you a significant amount of money on taxes. Now, you got something called a QBI, a qualified business expense, which can some kind of time offset. And see, this is what people don't talk about as much. So a qualified business expense deduction, the QBI deduction, is a tax break that allows you to deduct up to 20% of your business income from your taxable income. However, if you are an S corp, you will not be able to claim that full QBI. So that is that catch that sometimes people don't mention, that if you shift over to an S corp and you aren't able to claim that QBI, that could hurt some of that offset. So you want to make sure that you're in a place. And that's why talking to a CPA, talking to somebody that can look at your information and decide this is a good decision for you makes sense. So things to consider before switching to an S corp. You might lose some of your benefit of the QBI, right? And you will incur additional costs such as payroll and bookkeeping. So you have to also look at that. You're going to have some extra costs, and not being able to claim that QBI could help offset some of those benefits that you would gain. So in the conclusion, switching to an S corp might save you money on taxes, but it depends on your specific situation. Consider all the factors discussed not in the video, but in our webinar, and consult with your accountant. If you don't have one, get one. Again, hint, if you don't have a good CPA, there's one on here with us now, before making a decision on what it is that you want to do. And having yourself set up on payroll helps with this tremendously as well. So I'm gonna give you guys a couple of different scenarios. I'm gonna stop sharing my screen. And this is going to be just really strictly, again, for you guys to have some examples, because I know for me, sometimes it's really good to have some examples of what you mean. So in scenario one, we're going to talk about a solopreneur, right? So that's that person that say, hey, I'm in business. It's just me. I'm a consultant. It's a big win in this scenario. So Jane is running a successful consulting business. It's an LLC. She's bringing in $150,000 in net profit every year, but she's taking a tax hit as an LLC. She's paying 15.3% self-employment tax on the entire net income. That's $22,000. right? She paying $22,950. That's going straight to taxes in her scenario. If she did an S Corp switch in that scenario, Jane now converts to an S Corp and pays herself a reasonable salary of $60,000. She only pays self-employment tax on that salary, which comes to $9,180. The remaining $90,000 in profit is distributed as the dividends and isn't subject to self-employment tax. So the tax saving Jane saves a cool $13,000 in taxes. That's a big deal. When you got a net profit of $150,000 and switching to an S Corp saves you $13,700 in taxes, that's a big deal. That's money that she can use to invest into her setup. So in the next scenario, it's going to be an e-commerce company. And this one is also a winner, but not as big as the solopreneur. So Mark has an online store and is doing really well. He's doing $250,000 in net profit a year, and he has an LLC. So now let's look at the tax hit on this LLC. Self-employment taxes are eating into Mark's profits. He's paying 15.3% on his net income, which is $38,000. So Mark is paying $38,000 in taxes on that profit. The S Corp solution there, right? Mark switches to an S Corp and pays himself a reasonable salary of $80,000. He only pays self-employment tax on that amount, which is $12,000. He distributes the remaining $170,000 in dividends to avoid the self-employment tax, right? So what's the tax victory there? Mark saves a substantial $26,000 in taxes. Again, that's a game changer. That's $26,000 that he can invest into his business. Not to mention, if you start thinking about some of these savings we're talking about in this setup and moving into the space that where Sean is talking about with payroll and going into an IRA, now you're talking about a whole nother space that you're going into. Now, third scenario, a huge win, but still, again, I mean, not a huge win, but still a win. And you see these are dwindling down because I want you guys to know the scenarios can change for people. So Sarah has an architectural firm. Her net profit is $100,000 a year, and she has an LLC. Her hit is $15,300, right? 15.3% is the taxes. She's taking a $15,300 chunk of her profit each year is going to Uncle Sam. So if she shifts to an S Corp, she converts to S Corp and pays herself a reasonable salary of $50,000. Self-employment tax is $7,650. So her self-employment tax on that is $7,650. The remaining $50,000 is distributed as dividends free from self-employment tax. So what is her savings? Sarah saves $7,650 in taxes. While not as dramatic as the other scenarios, it still is a significant amount that she's saving. And this is with a person doing $100,000 in net profit a year. So this last example where I'm going to bring QBI into this so that you understand how this can affect. This is David. He's a freelance writer. He earns $300,000 a year in net profit as an LLC. He's paying $45,000, right? Almost 45.9. Almost $46,000 a year he's paying in taxes with a company that's earning $300,000 in profits. The S Corp situation here, Dave switches to an S Corp and pays himself a reasonable salary of $100,000, six figures, right? So now his self-employment tax on that is $15,300. So now he's paying himself $100,000 as a reasonable salary. He's paying $15,300 in self-employment taxes on that. He distributes the other $200,000 as dividends, right? The other $200,000 that he's not paying himself, that was profit. The tax reality in this, David saves $30,000 in self-employment taxes. However, he is now losing the ability to apply that qualified business income deduction. He can't do that now. So because he can't do that as an LLC, because he's moved from LLC to an S Corp, he can no longer do that. So his overall tax savings is going to take a hit there. So what's the takeaway on that? S Corps can offer significant tax savings for many businesses, right? But the QBI can complicate things for him. So where David was saving $30,000 in self-employment taxes, right? He is going to lose his qualified business expense doing that. And that could take a huge chunk out of that, which means he doesn't save as much. That's why it's important to not just take that information and say, oh, I'm going to switch over from an LLC to an S Corp, but talk to a CPA, talk to a person that understands taxes, that can say, based on your scenario, if you make what you made last year and you switched over, this is how this would affect you with QBI. This is what it would cost you. And now we know payroll costs. We know what that is through Sean. That's not a whole bunch on the payroll cost, but there's a couple of additional things that you have to do, and your books have to be kept up a little bit better. So unless you're keeping your books pristine right now, if you go from an LLC to an S corp, you're going to probably have to hire somebody to do some bookkeeping. And my suggestion, you should be doing that anyway. But if you're not, you're going to have to incur that cost at some point on that. So again, I wanted y'all to see those scenarios so that y'all will understand QBI can complicate things. So for high income businesses in certain industries, the potential loss of QBI deduction might offset their self-employment tax savings, and it's crucial to consult with the tax professional. We've said it probably about 5 or 6 times. Analyze your specific situation and determine if an S corp is the right move for you. We definitely know payroll is the right move for you. So with that being said, I'm gonna turn it over and see if Sean has something else he wants to add to that, to what I said there.
Not at all. Those examples were excellent. That was really awesome. It was great to hear some of those examples, and I'm glad that we were able to incorporate that for everyone to hear. Exactly as you said, Coach Dunbar, exactly as you said. So that was awesome. And those examples are extremely applicable and definitely, exactly as you said it, right? With the QBI, and it's on a situation basis. And again, not every business is the same, right? Not every business is the same. So we want to make sure that whatever we are offering that we can do for you guys, it is the best fit for you at the end of the day.
Absolutely. Good stuff. All right, guys. So if anybody has any questions again about anything, go ahead and open up. It's 8 p.m. I know we said 7 to 8. So for the first time, some of y'all probably saying, I can't believe Coach Dunbar finished on time. I never finish my webinars on time, ever. So see what happens when I work with somebody else that keep me timely. So thank you, Sean, for keeping me on time. Y'all see he did most of this presentation, which is probably why we ended on time. So if anybody has any questions, open up, unmute yourself, ask whatever questions that you may have, and we'll see if we can get them answered before we jump off here. Anybody?